All right, guys, so I'm going to try and do this a little bit differently this time. So I've decided to group stocks from sectors together. So in this video, I'm going to do all the EV stocks. I'm not going to go through all of them, but I'm going to take a look at the sector. Let's take a look at the EV sector today. Remember, this isn't financial advice, just providing my analysis on the charts. Let's start with Tesla. Tesla has been in this range for several days in a row now. It's been 1, 2, 3, 4 inside bars that traded within the range of this bar right here. So which way is it going to break? We don't know yet for sure, but the clues, I think, are suggesting a break to the downside. And I'm going to tell you why I think that. Obviously, I don't have confirmation of that yet, but I'm going to tell you why I think that. I think that because there's this huge volume spike on this day over here. I think that because we got a little bit higher volume today than yesterday, near the highs of today. So let's take a look. Where was most of that volume? And it was near the highs of today, and it closed near the low of the day. So there was this big upper wick of profit taking. It broke the resistance of yesterday without follow through. And for that reason, that's why I think it's going to end up breaking this pattern bearish. But I don't know for sure. I don't have 100% confirmation yet. It is also possible that it breaks bearish and then goes bullish after. But right now, there's no real signals to buy Tesla at this moment, in my opinion. Taking a look at the 4-hour chart, very clear pattern right here. So a break of this pattern, I would say take a look at the 4-hour chart when you're looking at this stock. A break of this pattern would probably suggest the direction. Of course, a bullish break above here and a hold of this support would suggest that it could go higher. And the next resistances we'd be looking at is upwards of 700, psychological, 750, and 780 up here. And if we get a downwards break, we're looking at supports. We don't have too much supports until this previous resistance, which is around 630. And this support down here, let's take a look at the weekly chart. Red line, weekly red line, around 646. That's a 4-week moving average. I think we're going to get a move down to that, close to that this week on Tesla. And I'm going to tell you why I think that. It's because we got this upper wick of profit taking, because this wick lacks a lower, this candle lacks a lower wick. You see there's no lower wick on this candle. Most candles have at least a little bit of a lower wick and an upper wick. This candle does not have that lower wick. It's not touching that middle Bollinger Band or any of these other supports. It seems like there's space to fill over here. So for that reason, I do think Tesla is going to break this pattern bearish in the short term. Let's take a look at NIO, much stronger than Tesla. NIO is all the way at the upper weekly Bollinger Band, whereas Tesla is just around the middle weekly Bollinger Band. NIO is up here in comparison. NIO passed these highs set in April, whereas Tesla did not. See, these are the highs in April on NIO. NIO's way above it. Tesla did not pass that. Although NIO is going to encounter some resistance around here. We have this previous support area, which could be a resistance area around here on NIO. Plus we have this weekly upper Bollinger Band on NIO, which could act as a resistance as well. And you take a look at space, and I want to go with space. I know this is not totally an EV stock, of course, but space, you see how it reacted at this upper weekly Bollinger Band. You want those bands to expand, but in this case, the band didn't expand, and the band acted as a resistance. And right now, NIO hasn't gotten into a position where the band started expanding. In fact, the band has been contracting. I don't know exactly how these band works, but it's some sort of mathematical calculation. But either way, the band is going to act as some sort of resistance on NIO, so the weekly upper Bollinger Band, plus this previous critical support area could act as a resistance as well. I wouldn't be surprised we get a little bit more of a push, fake out above these resistance areas, and then some profit taking. NIO is a bit overextended. You're getting a bit higher volumes up here. There was a bearish head and shoulders type of pattern, and it failed, and that's why you're getting this little bit of a squeeze right here on NIO. It is overbought on the hourly. It's in this consolidation pattern. I think we'll see a little bit more of a push followed by some profit taking. On NIO, it's a bit overextended above the red line, the 4-day moving average. As I said, critical resistance area up here. I think the bears are going to step in soon on NIO. Let's take a look at NKLA. A little bit of a double top over here. High volume spike up here. We're trading just below or right around that volume spike right now. Looks a bit like a cup and handle. So this could be a cup and handle on NKLA, or it could be a double top. Don't have that confirmation yet. I wouldn't be buying into it unless I'm more sure, but I don't like this big volume spike up over here. And I would ideally like to see a few more days of consolidation followed by a break of inside bars to the upside. There's no clear sign that says to buy NKLA yet. Let's take a look at it on the hourly. A little bit of an inverse head and shoulders on the hourly. It's wanting to set this as a support here. Low 17.96. That's the support area around 17.98, $18 on NKLA. A break of that, then we could be looking down as low as the low $17 mark as the next support to hold for NKLA bulls. This could be a potential bearish head and shoulders though on the 4-hour. Right now, I wouldn't be confident in this chart. Let's take a look back on the longer term time frame. We've got that 100-week moving average potential act as a resistance. There's just a lot of resistance areas around here. You got the 100-week moving average. You got the upper weekly Bollinger Band not too far. You got the 50-week moving average not too far. You got these clear resistances right up here, right around the $19.50 mark. It's not the most bullish chart out of the EV stocks right now. Let's take a look at Workhorse. Very similar to NKLA, I would say the exact same thing. I think Workhorse, just a very similar pattern up here. And take a look at this. You see this huge volume spike right here? Take note of how it hasn't passed that high of that volume spike. It did here momentarily, but it's still hovering below the high of this volume spike. And that's similar to what's gone on in AMC. Where AMC, see this huge volume spike, the highest volume. It was over 700 million volume that day. It still has not passed the high of that day. When there's huge volume spikes, it tends to create clear resistance or support areas depending on which direction the volume spike was. Fisker, more clear of an uptrend on Fisker than the other ones. It's making more headway here. Now, we got a bit of this volume spike the other day. I would be a little bit concerned about that because that's the highest volume since these lows down here. So there might be some selling going on up here. I would be a little bit cautious. But I do think this chart overall looks more bullish than the other two, except when you look on the weekly and you got this indecision candlestick. It's trying to ride the 4-week moving average, the red line. You see how it's just riding above that line and how it was riding below that line during the downtrend. And now we're testing that line. Obviously, bulls are going to want to see it hold above that area. If it starts breaking below and trading below that 4-week moving average again, then it could suggest that it's headed back into a downtrend. Right now, we got an indecision candlestick. No clear signals to buy at this point, in my opinion. XPEV, they're all looking pretty similar. XPEV's got a little bit of a cup and handle here as well. Again, high volume spike near the highs. I would be a little bit concerned with some of these EV plays because a lot of them are overextended. A lot of them already had a big up move. A lot of them already squeezed a lot of shorts. We're seeing some volume spikes near the highs. We're seeing these patterns which look like cup and handles and healthy bullish patterns and whatnot. And if they fail, a failed bull pattern is very bearish. A failed bear pattern is very bullish. So you want to be cautious. Just because it looks like a cup and handle doesn't mean that it's going to play out for sure. Blink charging. Similar thing up here. High volume spike near these highs. I'd say this chart looks healthier because it never declined as much as the other ones did. And it's got this double bottom on the weekly, which looks kind of better. But then you look at this weekly, little bit of a lack of a lower wick. Bulls obviously want to see a push up here, but you have that weekly upper Bollinger Band as a resistance area. A lot of these stocks look like they're either due for some consolidation or you need more data, in my opinion, before considering a buy here. So CCIV looks stronger out of the group, holding that red line, bullish candlestick right now on the weekly. It's near the highs. It's breaking out. It broke out of this little cup and handle, CCIV. Some news might be dropping. Maybe they're going to show off their car or something. I think someone told me something like that a few months ago. So I would say this is a more bullish chart, and it actually looks similar to like the BlackBerry chart, which is a good and bad. It looks similar to BlackBerry before BlackBerry exploded. But obviously BlackBerry is not looking too good right now, not doing too well. But this breaking bullish, this cup and handle, could be a signal that the other ones might break bullish as well. So keep an eye on CCIV because it seems to be leading the pack right now. Obviously, NIO is the true leader of the pack, but like I said, it's getting a little bit overextended and very close to a very clear resistance area. GM, a little bit of a downtrend here on GM. It's trying to hold this support area here. Looks like a little bit of a bear flag over here. Again, you see this high volume spike up here. Sometimes there's a volume spike and it doesn't decline right away. Maybe it goes a little bit higher and then it comes into play a little bit later. So now trapped a lot of these people in the red. And you see there's a volume spike up here too, and it's a red volume. But it was at the high. It was on this increase, on this gap up, and there was this volume spike. And that means there was a decent amount of selling pressure on the gap up. And then you've seen another spike at this low, which is why it's trying to hold this low as a support now. But we're getting a little bit of a bear flag around here on GM. No clear buy signals at this point. You could buy around here theoretically and put a stop loss just below there. Fairly low risk trade, because it could end up being a double bottom. So you buy, you put a stop loss below there, and if it doesn't play out, you exit the trade with a small loss. HYLN, one of the more bearish out of the group, still near their lows, didn't get nearly as much a push as a lot of the other ones. And I had a friend who had this stock back a while ago, and I told him to sell it once I saw this. He was already down, and I said it's going even lower. And look at this. It was a huge bearish head and shoulders pattern on the weekly. And look, it just did not perform well since then. That is a very bearish pattern. And it followed through. And, you know, I think HYLN is weaker out of the bunch. It's not one I would be trading personally. Ford, similar action to GM. See this volume spike down here, though. It's holding that area. So ideally, bulls want to see this area hold as a support around the $14 mark on Ford, because if it breaks below that area, then all this volume is going to be sitting in the red, and that obviously wouldn't be too good for the bulls right now. It is riding below that 4-day moving average, the red line, so that suggests that it's still currently in a downtrend Ford as you got these lower highs. It's going to want to try and hold this low, 1444. That's the next support that we're looking at other than today's low. We'll see how that goes. Thanks for watching. That's for the EV stocks. I'm going to do some other stocks as well. Have a good night, guys. Remember to like, comment, subscribe, share. Check out my course, and I got a lot more coming soon for you guys.